On behalf of First Service Residential, thank you for joining us for this edition of our ongoing webinar series designed to assist you as a volunteer member of your community's board of directors. Whether you've been a director for many years or were just elected by your neighbors to your board, today's board member orientation session will provide an important overview of the duties, regulatory requirements, and common opportunities and challenges you will encounter during your time on the board of directors. My name is Brian Butler, and I am Senior Vice President of our High-Rise Division based here in Chicago, Illinois. As part of my role with First Service Residential, I have the opportunity to work with hundreds of board members just like you and support them in achieving their goals of caring for their community and improvement in the value of their homes. We believe that supporting our board member clients through educational opportunities like this can lead to more fulfilling experiences for our board members and for our management partnership. Joining me today is attorney Howard Dakoff, partner in the Community Association Practice Group of Levenfeld Pearlstein. As a seasoned legal professional, Howard brings decades of experience in condominium, real estate, and general corporate law. He has assisted hundreds of community associations throughout the Chicagoland area and is an expert on emerging issues. You may also recognize him from his featured role as the weekly columnist for the Chicago Tribune Sunday edition as the condo advisor. Howard, thank you so much for joining us today. We're so excited to have you.
Brian, thank you. And I look forward to this webinar and educating your boards and your managers to give them the tools to effectively administer their condo associations.
Good. Well, it's an exciting topic, and it's one that comes up every year right after annual meeting season. So we're right at the time that I think most people are looking for a little bit of advice as they sit down for that first time at the board table. So we're happy to get started here. I'm going to just share my screen so that you can see a presentation to go along with your explanation today.
Okay.
So after getting past a very lovely headshot, Howard, we're going to move straight on into the agenda here. And so I think our goal today is to cover a number of these topics, and you as the subject matter expert, we're thrilled to have you here. We're going to go over what the goal of the board is as a director on the board, an overview of the governing documents that are essentially the bread and butter of what you do as a board member, the individual board roles, officer roles, annual meeting topics, and a lot of good tips and tricks on how to be a successful board member, and maybe some common pitfalls that you may encounter along the way. So Howard, if that's okay, I'm going to turn it over to you for whatever you want to bring to the table here.
Great. Let's educate your boards. So what's the most basic goal when you're on a condo board? Well, the job doesn't pay well because you're a volunteer. And what is your mission? Your mission statement is what you see on the screen. It's to preserve, protect, maintain, and enhance the condominium association. You are the administrative body of the board. So what are the rules or the laws? We'll call them like the bowling alley. What are those, the gutter balls? What are the bounds of what you need to know? Well, there's three primary triangle hierarchy of documents. At the top of the food chain is the Illinois Condominium Property Act if you're a condo, or the SECA statute, which is the Common Interest Community Association Act if you're a homeowners association that's non-condo and you fit the criteria. Let's stick with the condos because that's really what we're talking about. Below that, you have your condo declaration and bylaws. And below that, you have the rules. Why is there a hierarchy? If your condo declaration has a provision inconsistent with the Condo Act, the Condo Act controls. Same goes for the rules. If the rules are inconsistent with the declaration provision controls. So it's always good to periodically amend and restate your governing documents to make sure it's consistent with the Condo Act. And it's also good to review your rules on occasion to make sure they're consistent with your declaration in the Condo Act. So a condominium declaration. The condominium declaration, for lack of a better illustration, is your roadmap. It's your roadmap that guides the restrictions on all of the unit owners, and your declaration incorporates bylaws, which ultimately will govern the process of the board of directors. So what's in a condominium declaration? At the most basic level, it contains easements that burden all the property. It contains obligations to maintain, repair, and replace. For the condo, it's the common elements. For the unit owner, it's the units. Limited common elements is like this hybrid category. You have to look at your governing documents. Most declarations say the board will maintain, the unit owner pays. Some declarations could say the unit owner maintains and the unit owner pays. So you just have to look at what those provisions are. It also identifies what the unit ownership is, so that way you know how much of the total cost to administer the association each unit is responsible for. And amendments, governing documents are what we call living documents, which means they can be amended. And the procedures to amend are identified in the condominium declaration. The Condominium Act, Section 27, does have some maximum boundaries of unit owner approval threat standards, but each declaration has its own individual standards. It's usually no less than 2/3, no more than 75%. Bylaws, basically, bylaws are like the rules to operate the condo board. So it sets what the quorum requirement is, how many meetings a year you must have, what the authority and power of the board of directors is, if there's any contract term limits, if there's any spending limits. It outlines the governance of the association. Rules and regs. Well, rules and regs supplement the Condo Act and the Declaration and Bylaws. The rules and regs cover topics that would not be in the condo dec generally. It talks about how you use your hallways, how you use your party room if you have one, your recreational facilities, any specific rules or policies that govern the recreational facilities. It will contain timeframes in which your assessments are due. It'll list fines. Some rules have a fine schedule. Some rules have minimum fines, which means the board of directors may levy a fine at the minimum or higher, depending on the gravity of the violation. Many rules will also restate some concepts in the condo dec and bylaws. For instance, all bylaws will usually contain a provision that unit owners cannot create a noxious or offensive activity in their unit. But the rules may flesh that out and says you can't listen to loud music past certain hours. You can't have a party past certain hours. It gives more specific meat on the bone, whereas the dec and bylaws is the basic bone. Your rules could be a 40-page document, could be more, could be less, of all the separate policies that you as a unit owner need to know and you as a board need to know, because you're going to hold all those owners to those standards. Board of directors. So, high level. You are the elected officials of your condominium association. And a condo board is kind of like a mini government, right? So the shareholders, the unit owners elect directors, and the directors make decisions. And no different than our government, right? We here in America, whether it's at the local level, the state level, or the federal level, we vote, we elect people, and they make decisions. Sometimes we don't like those decisions, but fortunately, if you're watching this webinar, you're in control of those decisions. So what do you need to know? Well, you need to know that you have a legal obligation to the association called a fiduciary duty. It basically means that you have a legal obligation to do what's in the best interest of the association. And the legal standard is you need to use your reasonable business judgment. Two condo associations with the same problem could determine to do two separate courses of action. What you just need to know is the outer boundaries are you need to be reasonable within your decision-making process. Brian, tell me, from your management perspective, how familiar do you think board members are with understanding their legal obligations to the association in terms of what they should and shouldn't do?
I think it depends on the director, right? We have board members that come from a variety of backgrounds. There are attorneys who sit on the board. They certainly understand the concepts of fiduciary duties and other requirements. But you have other working professionals, teachers, accountants, stay-at-home parents. It's a full gamut, right, of folks and their backgrounds. But I do appreciate the board members that reach out to be educated. They want to understand what those obligations are. And so we do try and educate them, but hearing it from an authority like yourself, I think always helps.
Great. Let's do a few examples of what it means to have a fiduciary duty, because for those that are looking at the slide, the other ones underneath are pretty basic. Understand the financials, communicate, maintain records. But the fiduciary duty, many board members have good questions. Duty of confidentiality. Is that something that is a duty or is that a suggestion?
Duty.
Duty. How about good faith? Suggestion or legal obligation?
Legal obligation.
Yeah. How about treat your other board members with respect? Legal obligation or good suggestion?
I'd like to make it a legal obligation, but I think it's a great suggestion. This is a great pop quiz, by the way, Howard. You're keeping me on my toes here.
I got to keep you on your toes. Keep everyone enjoying this content. So those are examples of fiduciary obligation. Other examples from a pure legal is you cannot have a conflict of interest. So if you're on a board and a board is going to enter into a contract where you as a director have more than a 25% interest in the contractor, you need to disclose that. It's a conflict of interest. So there's a lot of nuance. And if you're not sure, this is where you would ask your management team. And to the extent that it needs to be elevated to the legal team, you would do so. Next slide. So board responsibilities. We talked about the duties, right? That's the legal obligation. But many board members just say, can you boil down in simple English, what do we have to do? Well, what you have to do from a legal perspective is comply with the governing documents, which means you should flip through the declaration and bylaws to have a rudimentary understanding of what's contained in there. And in simple English, what's contained in there is what you see on the slide. Condo boards have a legal obligation to collect assessments. You cannot allow unit owners not to pay their assessments. You may have a friend who can't afford to pay assessments. You cannot allow that person to not pay. You may have a neighbor who has a legitimate financial hardship, and you must collect assessments. However, you still do have the latitude to make payment arrangements. But the Condo Act is very clear in Section 18 that a condo board cannot waive assessments. You need to maintain the common elements, right? Most of the time, you also mandate to maintain, repair, and replace the limited common elements. And the difference between those two, for those new board members fresh to condo, a common element is a shared area that is not part of the unit. A limited common element is an area that's only used by one or more units, but is still part of the common elements. Examples could be a balcony. Examples would be doors and windows. Examples could be a parking space, depending on your governing documents. Some parking spaces in some condos are deeded units, just like your residential unit with a small percentage of ownership. And some are a parking space, classified like a balcony. Only one unit can use it, but it's part of the common elements. And there's a variety of nuanced requirements in the Condo Act. Condo Act requires operating budgets be presented to the unit owners, annual audits be presented to the unit owners. The condo board is a not-for-profit corporation. You're not a 501c3 corporation. A 501c3 corporation does not pay taxes because it's income taxes. It's a charitable organization. A condo is a not-for-profit, and you could have tax liability depending on how you structure your expenses and income. If you have a budget of $1 million and you collect $1 million and you spend $1 million of money, you have no income, you pay no taxes. If you budget $1 million, but for some reason your board only spends $600,000, you have a $400,000 excess. And depending on what you do with that money could mean tax liability. If you put it in a reserve account, you refund it to the owners, no tax liability. If you keep it in operating expenses and then roll it over to the next year, may have tax liability. So one of the things that you're going to do besides management professionals, besides legal professionals, besides architects and engineer professionals you may need for projects, you want to have a good, solid relationship with an accounting firm who has knowledge in condominium law to try and mitigate any potential tax liability. Very easy to do. A couple typical tips that an accountant will recommend, that management will also recommend, will avoid tax liability. And then you maintain the records. You can appeal real estate tax bills. If you're in the city of Chicago, you are probably aware that the city is broke. And the only way the city can generate money besides tax revenue is real estate tax revenue. So real estate taxes have been going up both for residential and commercial properties. So it would be wise, depending on where you are in the city, every 3 years, the city will reevaluate taxes. You may want to consider challenging your tax liability by retaining an appropriate professional to do so. Next slide. So Brian and I put in here a little board member code of conduct. And we touched on some of these issues a little bit with the fiduciary obligation explanation. A code of conduct is recommended guidelines for an efficient condominium board or common interest community association board really operating effectively. Some of this is legal, some of it are suggestions. But if you follow the next 2 slides, you're going to see your meetings will be more civil, and the content of the administration of your association will just go that much more smooth. So what are they? Well, honesty and good faith. Those are legal obligations. So we're just stating the obvious. Care, diligence, and skill. Well, this is that reasonable person standard we talked about earlier. You need to make reasonable decisions. Can a condo board be wrong and have liability? Well, it depends. If you rely on the advice of experts and you make a bad decision, there's no personal liability because you were reasonable. You relied on the advice of experts. If you don't rely on the advice of experts and you make an imprudent decision, you may have liability. So let me give you an example. You're on a board. You look at the bank statements and you have money in a checking account earning 0.01% interest, and you have money in CDs earning just under 1% interest. But one of your board members is an investment banker who says we should be in the stock market. And you go ahead and buy junk bonds because the interest rates are really good. Lo and behold, you put all the reserve accounts money into the junk bonds. Something goes south and you lose all the money. Could you have potential liability? The answer is yes. Would a condo association put all of their money in a speculative investment? The answer is probably not. It is not a good best practice to do so. So you have to look at the facts, but that's a good illustration of if you were relying on the advice of experts, if you contacted your management agent, you contact your attorney and say, can we put our reserve money into junk bonds? They may say, well, you could, but you shouldn't. And some on the more aggressive side would probably say, no, don't do that. Good conduct. You need to be civil with each other. Act professional. There will be times that you disagree with each other. Brian, you have any anecdotes of board members that had a spirited discussion on a 5-person board? The decision was 3-2.
Sometimes it does come down to that, right? I mean, yeah. The board structure as a whole has multiple people for a reason. It's to get to consensus. It's not ruling by fiat or from a dictatorship, right? You do have to come to an agreement and be civil with each other. You can disagree without being disagreeable. And at the end of the day, you have to share an elevator or a lobby or go to the mail slot with these folks that are your neighbors. You should be approaching that with a level of respect and civility for sure.
I agree. And I think your quote that you can disagree without being disagreeable is really apropos. You know, it's okay that you may have a different view. Treat everyone with respect, express your viewpoint, majority rules. Next slide. All right, the next couple of items on a typical code of conduct are obvious. If once the decision is made of a board of directors, board members should not be trying to create a mutiny of anti-support for the board decision. You voice your concern, the minutes will reflect that you may disagree. You move on, board members should support the decision of the board. They may disagree, and the minutes can reflect so, but they should support the decision once it's made. Defamation comes in two buckets. Bucket one is the unintentional, bucket two is the intentional. The intentional is easy. You obviously should save strongly worded opinions about someone's character or their business or their life, because nothing good will come of that. The more nuanced is the unintentional, when you are saying things that are derogatory about someone that you don't think rise to the level of defamation, but it does. It puts the board in a precarious situation, depending on what's said, because it could expose you individually to liability and it could expose the association to liability. So, like we all learned in preschool, if you have nothing nice to say, don't say anything, is the general rule you want to abide by. And minimizing conflict is the obvious. You don't need to roll your eyes at your fellow board members. You don't need to disrespect fellow board members based on any type of class of whether it's race or religion or gender or sexual orientation. Treat everybody with respect and move forward. So what's your authority? The Illinois Condominium Property Act contains the authority of a board of directors, right? That's the roadmap of everything. Section 18, if you want a specific section to look at, those list the primary items that a bylaws would have. Section 18.4 lists the actual authority of the board of directors. Most declaration and bylaws contain all of the provisions of section 18 and 18.4 of the Condominium Act. So if you want to really see what are the list of items that must be in our bylaws, section 18, the list of authority, section 18.4, you can read it. In summary, you collect assessments, you maintain the common elements, you administer the property, you make decisions for contracts, you hire and fire employees, you adopt rules. Very straightforward. So, board protections. One of the most common questions I get asked as an attorney is when new board members are elected and they're trying to understand what's my liability exposure for serving on the board. First thing you should know if you are a first-time board member is, number one, your board almost certainly, especially if you are represented, managed by FSR, they will make sure every board of directors has directors and officers liability insurance. That is an insurance policy that is covering the decisions of the board of directors or the omissions of the board of directors. So basically, if there's a mistake and there's a lawsuit, there's usually insurance coverage for that lawsuit. Number two, almost all bylaws, in fact, I've never seen bylaws not have it, contain an indemnification provision. Indemnification provision says if you are a director and you make a decision on behalf of the board of directors and you get sued, the association will pay your legal fees and judgment. So even if there's no insurance, you still have an indemnification. But all indemnifications have an exception: gross negligence or willful and wanton misconduct. What is that? That's basically something so outrageous that could create liability. And that's in essence what is covered here. How do you avoid making a decision that could be grossly negligent or willful and wanton? Well, let me give you an example. If you have a staircase and you decide to allow the youth in your building to take a skateboard and skate down your stairs, and the first child tries, falls, and injures themselves severely, that would be an example of a decision that is willful and wanton. nothing good can come of it. You don't let people slide down the handrails of the stairs, same thing. So decisions have to be thoughtful. But how do you get protection? Well, there was a case called the Palm 2 case, came down a few years ago, and it basically said that a board of directors will not be held liable if they rely on the advice of experts. And that's the same premise that was in the Goldberg case that's quoted here on the slide a few years earlier. So if you ask your managing agent gives you advice, you rely on it, turns out not best advice, you will not be liable for breach of fiduciary duty. Same with me. I'm a lawyer. If I give you a legal opinion that the board can do something or cannot do something, you make a decision based on my advice or any legal provider advice. We made a mistake, you relied on it, you can't be sued. We can. The board may have a claim against us, and that's why we have malpractice insurance, just like you have directors and officers liability insurance. So you have protections, you have insurance, you have an indemnification in your bylaws, and you have a brain. And what we expect you to do as a board member is use reasonable diligence, ask good questions, ask for assistance, and you will have no issues with liability.
Howard, I think if I can jump in here for a second, you're talking a lot about how to protect yourself as a board member and follow through by relying on the advice of experts. And I'm sure you've seen this before. You may have sort of inherent expertise from your board itself. Like I mentioned before, you might have attorneys, you might have accountants, you might have structural engineers on your board. Is it really best practice to rely upon that talent? Or should we sort of acknowledge that there may be things that we don't know, even as working professionals?
Yeah, it's kind of like the asterisk at the end of something whenever you read it. It's, caveat emptor, buyer beware. It's good when board members or unit owners have inherent knowledge or expertise that can aid the board. And those people can offer opinions which is a little bit more color than those who don't have that experience. However, when it comes down to making decisions, especially decisions with financial costs associated with it, it is still best to rely on the advice of the retained professionals with experience in this industry. Number one, if nothing else, you want to protect yourself from liability. But number two, our experience as lawyers, your experience as a property management firm, that's invaluable for the board to understand the best practice. And when you follow best practice, you're really not only making generally good decisions, but you're eliminating that potential for liability. So that's a great question.
Straight to your point. Rely on these characters here.
Yeah, these are examples of some professionals. And one that's not on there is if you're doing a large construction project, you might hire an accountant or engineer. And it could be a plumber, right? So you can just go down the list of professionals, but those are the three from a governance standpoint. So a lot of times we have board presidents who enjoy the role, are effective, and the board continues to re-elect them, sometimes in perpetuity, almost like a fiefdom. But for those of you that just had a board election and there's a new perspective and you're a first-time board president, you may be asking, well, what are my rights? What rights or authorities do I have as a board president? The most common question: do I, as a board president, have any more authority than any other board members? The answer, no. So you cannot make decisions on behalf of the board because you're the board president. What you are is you are a figurehead, and you are clearly the elected leader within the board. So you do have a voice of speaking on behalf of the board, but you cannot make decisions on behalf of the board. Under the Condo Act, your real authority, the only difference between a board president and a board member at large, is you preside over the meetings. And technically, you can set the sergeant at arms to send somebody out who's being disruptive. But as a practical matter, most boards and most management companies rely on the board president to be the primary liaison between management and legal counsel. And we recommend one liaison between management and legal counsel. Why? Well, let's start with me. as a typical attorney, if you have multiple board members calling, you're paying for multiple pieces of advice when I could be answering the same question. So you don't want to pay for 4 or 5 time entries for the same question. Number 2, you don't want to unintentionally be giving the lawyer or the managing agent different direction. Board members have different opinions. Number 3, it's just an inefficient use of time. If every board member is giving directives to management, management isn't sure which to do first. They don't want to offend any of their board members because you are their client. Number 2, that could be oppressive on their time and they have other obligations. So by having one point of contact, there's a funnel. Board members, you should be requesting from the board president what you want from management or the legal counsel or the accountant. And then the board president is that primary liaison. Customarily, the board president signs contracts that the board approves. Once again, the board president doesn't have any authority to just make decisions. The only caveat is if the board of directors delegates the authority to a single board member to make decisions, then that board member can make decisions. But of course, caveat, beware, if a board gives the authority for someone to make decisions, that one person may make a decision that you don't like. So it's always best practice to have the board make the decisions, except in certain circumstances. And I'll give you an example. Let's say you have a contract like a landscaping contract that may be only $500. You could give a board president the decision to execute a contract up to $500. And then the board president can talk with the landscaper and sign that contract. So you can make certain decisions that may not happen for a few weeks or months ahead within certain boundaries. But most decisions, board decision.
So I like the use of the word customarily here, right? This is a best practice, but there are times when you may need to have a number of board members working on different things, right? So where we see this most commonly, at least in the management relationship, would be during the budget process. If you have a treasurer that serves as the liaison to management while you're in the creation process, that is perfectly acceptable. And as long as you as a board have talked about that and have affirmatively chosen that board member to be the liaison for that purpose, we're happy to work with any of the board members. And there's an open door policy with management, right? We will hear you out. You are a representative of your community. You are our client. But when it comes to that day-to-day direction, that day-to-day relationship between board meetings, it does help to have one point of contact for sure.
Right. Do you have any examples of inefficient board president experiences over the years where you saw conduct that created more problems than it cured?
Yeah, I think some of the areas you sort of mentioned this, right? Which is too much concentration of information or perceived power can create unwariness on behalf of the other board members. They may not feel in the loop. They may feel that they're not receiving complete information. As management, our duty is to the board as a whole, not to the board president. So we want to share information broadly, widely. You should all have access to the same data from us. So anytime there's sort of a funnel, right, or a bottleneck there between management and the full board, that can create a challenge. And also acting on assumptions versus power that's actually been delegated to the president. So you just mentioned there are times when an individual board member can bind the association, provided the board has actively and affirmatively delegated that power to them. There are times we're working with new clients, and this is the way it's always been done. And the board president has always managed the holiday fund or chosen the raises, and that was great. But if it's not in your minutes, if you haven't delegated that authority, as licensed professionals, we're going to question that. We want to make sure you're protected at the end of the day.
Yeah, I think actually you just brought up two specific examples I was thinking about. I have had board presidents authorize management to increase wages or issue holiday bonuses without consulting with the board. So if you're listening to this, don't be offended if your property manager or your property management team pushes back. They're not doing it because they disagree with the raise or the bonus. They're just trying to make sure that the board follows proper process, really protecting you from stepping into quicksand, right? And so that's one of the fundamental benefits to hiring a professional management firm is Not only do they manage the day-to-day operations, but they're helping the board from stepping into pitfalls. So what's a treasurer do? Well, treasurer, as you would expect, is somebody who usually has some experience with reviewing financials, but plenty of times has no experience. But the treasurer is responsible for being the primary point of contact for financial matters. And so at a minimum, all board members should be reviewing the monthly financials that get sent by management. But the treasurer for sure should, because you need to know how you're doing from an income standpoint and a spending standpoint. And if there's a problem or a trend, you need to speak about it with management so that you can bring it to the full board. And then you review income and expenses and cash flow balances, et cetera.
The treasurer's role is probably one of those other formative partnerships that we work with when it comes to management. And I want to make sure you mentioned that some are fully trained on financials. For some, it is a foreign language. Our goal is to make sure at the end of the day that you're educated as to what's included in your financial packet. So don't worry that you have to chase your manager for more information. If there are material variances, if there's something like the polar vortex a few years ago that created larger than expected electricity and gas expenses because of the heating requirements, if those things are coming up, we're going to bring a plan to you proactively. We're going to explain that to you proactively. You're not going to have to chase us for that. And I think that helps create more of an environment of trust, not just with the treasurer, but with the board as a whole. So that's our goal here. You don't have to be an expert, and we will bring things to you proactively so you don't have to chase us for it.
Yeah, I agree. And I think if you're a treasurer who doesn't have a financial background, ask your management team to explain the financials so you understand what you're looking at. For the most part, the treasurer is the point person. You're not responsible for the finances of the association. The board is, but you're the point person. So being the point person, you're the first threshold level to catch anything that seems out of the ordinary. Explain why the expenses are more, but it could just be the timing. Some projects take in the beginning of the year, so that could offset the appearance of income and expenses in January, but that's okay with an explanation. You're just there to be the litmus test. You're the point person. That brings us to the secretary. What does the secretary do? Well, secretary primarily does two things. One, they keep association records, and two, they prepare the minutes. When you have a professional management company, the management company's delegated keeping the records. So what you're really doing is preparing the minutes. And those minutes will be distributed to the board. And at the next board meeting, the board will discuss the previous meeting's minutes, if there's any corrections they're made, and then those minutes become official records. What should go in minutes? So Brian probably will have some good anecdotal stories of what he's seen that should not be in minutes. But let me tell you from a basic level what should be in minutes. Minutes are not meant to be a full, comprehensive summary of everything that was said at a board meeting, everything that was meant, or everything that should be encountered in the coming months. What an effective board meeting minutes will be, it will record board members present, it will record the decisions, meaning motions, and there are times where a little extra color is helpful to message to the ownership what's going on with the community. But it is not meant to be board member 1 said blank, board member 2 disagreed and thought X, board member 3 disagreed with board members A and B and said Y. It is not meant to be that comprehensive. They should not be a short story. It should be bullet points, motion to blank, those in favor, those opposed, motion to blank, et cetera, et cetera. And then there are times where you do add a little bit more color. But remember this, owners can read the minutes and they're entitled to them, but also prospective purchasers. So if you deviate too much and put information in your minutes that could be confusing to someone who's reading them without context, you're doing yourself and your owners a disservice because you could create apprehension among your owners and apprehension against purchasers. So we don't offer subjective or speculative points in minutes. Minutes record decisions, but there may be times where you absolutely want to put in the minutes a little bit more color Does that kind of explain some of the pitfalls and what you see as good and bad?
Yeah, I think you hit the highlights right there, right? You need to not just view these from your perspective, but put yourself in the shoes of a prospective buyer. Howard just mentioned some anecdotes. It's amazing how long folks will go back into the minutes and try and, they're doing their due diligence. It's a huge purchase. They want to make sure they understand the community. But innocuous statements or things you may view as innocuous end up coming back as questions from purchasers. So if there's a noise complaint from a loud dog in one unit and that comes to the board several times, or it's in an owner forum and you're including that in your meeting minutes, even though you don't make any decisions on it, we can still get questions years later about, is it a noisy building? Yeah. We saw that there's some issues with dogs. We saw there's some issues. There's a propensity to read into any details that you put into that and make it bigger than it is. And one of the things that is important about this, and I think you sort of referenced it there, your minutes are your story. They are a function of the board. What are you telling your community and your purchasers? It's not really a function of management to create that narrative for you. And so there are boards that I think like to delegate the task of creation of minutes to management or try and do that. We really caution against it. We don't want to have there to be any appearance of conflict or any sort of interest that management has. Again, you are the board, you set policy. Management just enacts it. So you want to make sure that your words are captured accurately, completely, and that you're in control of them.
Sounds great. Board meetings. Well, I think Brian and I can speak for each other. We've seen effective board meetings and we've seen long, tenuous, ineffective board meetings. So there's some good best practices to shepherd your meetings very quickly. Well, first is you need to understand what the context is. Unit owners are entitled to attend meetings. Non-unit owners are not, which means tenants are not legally entitled. Guests are not. Lawyers of unit owners are not. Boards will sometimes allow people to come for specific purposes, but only unit owners are allowed to attend. And they are allowed to watch, not speak during the board meeting. That's important. So if you have been in the ownership, you get elected to the board, and your meetings are long, and it's because as the board is talking through issues, owners are yelling from the peanut gallery their opinions or asking questions. And it's always, I have one question, which turns into 4 questions and a 10-minute detour of the discussion. You can say, thank you for your question. We're not taking questions. This is a board meeting. And then you respectfully move forward with the discussion. If you allow unit owners to comment on everything, your meetings will go sideways. Quorum of the board. That is the minimum number of board members to hold a meeting. Your bylaws will set, it's defaulted at a majority, but some communities have a higher percentage. Boards must meet 4 times a year. Most high rises will meet once a month, except maybe not in certain times of the summer or maybe not in the holiday time, depending on how it works from a scheduling perspective. But bigger the building, the more issues you may need to meet more regularly. Technology may be used. This is a COVID real impact and change of policy. Boards would previously, before COVID, use telephone conferences, speakerphone. And it was done selectively, but almost every board held in-person meetings. And they always held them at night. And it was done in a manner to try and create the opportunity for owners to attend in person. With COVID, we have some changes in our lifestyle, both in the personal and the professional, but also in the condominium. And I think all board meetings since March have probably been held virtually through Zoom or WebEx or any other software platform. And I think you're going to see as a lasting impact of COVID, well beyond when we all get our vaccines, which we will in the coming months, you are going to see boards continuing to hold virtual board meetings. Why? Because people can easily attend. They can listen as long as they want from wherever they want. And board meetings can even be at different times and it's not too inconvenient for people. So quorum of the board can be held through technology, but more importantly, the meeting itself can be held through technology. What is the notice period? Board meetings must be called on 48 hours notice minimum. And that has to be delivered and posted in the common elements. In delivery can either be door drop to on-site owners, regular mail to on-site owners, or email to any of those who have opted in pursuant to an electronic communication rule. If your community does not have an electronic communication and electronic voting rule, we strongly recommend, as part of your rule review, you adopt a rule to allow for that. This is 2021. And in the future, 2022, 2023, we are all conducting our lives on these smartphones. And so because that has changed the way that we communicate with each other, it can also change the way you govern. Use technology to your benefit. Board meetings, they're called by the board president or 25% of the board. Closed session. So there's two types of board meetings. There's open and closed. There's 6 categories of closed sessions. Closed sessions, as you can imagine, are not in front of the owners. Open sessions are in front of the unit owners. The reasons or basis for a valid closed session are litigation, contracts, interviewing employees, rule violations, discussions of delinquent assessments, and consulting with legal counsel. A common practice is to recess the closed session at a board meeting, perfectly legal. You would have a notice board meeting. You would conduct the board meeting at the end of the meeting. If the board has any of these categories to discuss, they would discuss them in closed session. Many times the board will meet in closed session before the meeting. Perfectly legal, no problem. There was a case that you need to be aware of called the Palm 2 case. The Palm 2 case created a hurdle with how board members communicate with each other. And that case stands for the proposition that board members may not conduct board business via email vote, or a quorum of the board discussing board business without notice to the owners. So that's a general rule. There's an exception for closed sessions. If you're discussing one of these categories, you don't have to give notice to the owners, and you can use email, do it sparingly, and you can talk on the telephone sparingly. But for open session, you need to be aware, for if it's not one of these categories that you see on your screen, you cannot email each other. And it's counterintuitive to new board members. New board members come on, especially if they've never served on a condominium board, and just assume, hey, I want to communicate with my other board members to share information. That's how we're going to conduct business. And then they get explained by management, you can't do that. And there's this things that make you go, moment. What do you mean I can't conduct board business? And the reason is the Illinois legislature has the statute, the Condo Act, and the courts have interpreted it very strictly with the certain exceptions. And they said, you cannot discuss board business without notice to the owners. And the idea being that this is a transparent, open condo association, and they just didn't want the boards to be talking not in front of the owners. And these are the exceptions.
I think that's one of the toughest things, is to really understand what you can't talk about, right? You have to be able to communicate to board members, and this is the management lesson, as you just mentioned, to every new board member. If you're going to meet in closed session, it has to be for one of these things. If you're in closed session and you start to veer into one of the areas that isn't covered here, you need to be doing that in open session. Your homeowners have, as you mentioned before, they are entitled to come and watch you in an open meeting. And it's not just for you to say, we approve this, we approve that, meeting adjourned. It's to watch you discuss. It's to watch you deliberate. It's to watch the back and forth. That's what they have an entitlement to. And you don't want to deprive them of that by trying to make decisions by email or do all of those other things to get on the same page before a board meeting. You're not well served by that.
Yeah, and let me add a little bit more color. Stay in the slide for 1 second.
Mm-hmm.
So as a board member, you should be aware, we've already talked about, for open board meetings, you must keep minutes. Well, there was a case called the Boucher case. In the Boucher case, was an interesting case. It was a unit owner who was incredibly abusive to management and staff, and the board levied a fine. And the board didn't give the owner all of the information at the fine hearing. And so the unit owner sued for challenging what he said, even though it was declared to be offensive and rude, and B, whether or not the board was required to give information during a fine hearing, and C, whether the board had to keep closed session minutes. Up until the Boucher case, which was only a few years ago, not a single practitioner in Chicago who represents condos told boards to keep minutes of closed sessions. Why? Because minutes, as I already told you, document decisions. A closed session is for discussion only. No decisions can be made in closed session. So if you're only discussing things, why would you need to keep minutes? There were no decisions. There's nothing to take minutes of. Notwithstanding, the Illinois Appellate Court in the Boucher case declared boards must keep minutes of closed session. It's an administrative formality. But the caveat is you still do not, I repeat, you do not put the content of the discussions, but you need to say who was there, when it was called, and for what purpose it was called. And you need to identify which of the 6 categories you see on your screen apply to the session. So owners are entitled to minutes of closed session, but the minutes themselves will not contain the discussion, but they will decide who was present and when a meeting occurred. All decisions themselves must be in open session. Board meeting agenda. So it's common but not required to have a board meeting agenda. Those boards that follow a meeting agenda inherently will have a more effective meeting because you just go through the agenda. What are in typical provisions? You see them on the screen, right? You want to talk about the meeting, when it is, any committee reports. The board will discuss old business, things that were left over from the previous meeting. The board will discuss new business, things that are coming up. If you need a closed session, you adjourn. And there's some information there. The open forum. Open forums are when most boards give an opportunity for the owners to speak. Should not be during the board meeting itself. Sometimes board meetings are recorded. You don't want to have that owner forum recorded. And the owner forum should not be part of the board meeting minutes. There's rationales to have it before and after. Most boards tend to have it before for 2 reasons. One, some owners only come to say their piece and leave. And if it's occurring at the end of the meeting, no one knows exactly when the end of the meeting will be, because it could be an hour, could be an hour 6 minutes, could be an hour 20 minutes, could be 2 hours and 20 minutes. So if it's at the end of the meeting, owners who don't sit through the whole meeting get frustrated and leave. And number 2, if you hold the open forum at the end of the meeting, sometimes owners will lament because they could not speak during the meeting. They will use the owner forum at the end to criticize the board or ask questions about what was discussed. If you have your open forum at the beginning of the meeting, it prevents this ad nauseum revisiting of issues that a unit owner may have that disagrees with the board, or to give their input on a discussion. So that's why it sometimes is more effective to have it at the beginning of the meeting. But I have quite a few clients, and I know that Brian and I talked about this issue. There are plenty of boards who have it at the end of the meeting with no problem, and so it's a board decision.
It's one of the things I think you referenced earlier was that there are board meetings that can go on very long, right? As you're looking at an agenda, what's a reasonable amount of business that you can conduct in one meeting? Give yourself, recognize the common humanity in everyone sitting around a board table, or now in the Brady Bunch Zoom boxes, right? Everyone has a shelf life when it comes to attention span, ability to digest information. If your meetings are going on 90 minutes, 2 hours, 3 hours, 4 hours, you're really it's counterproductive at that point, right? They're not at their best. You're not at your best. And folks are really they're defeated by the end of that. They're completely, you can watch them almost like shrink when it's finally over. Keeping efficient meetings is so critical if you're going to have a good quality discussion among board members. And that starts with your agenda here. for
Yeah,
sure.
and I would add, so if you're having meetings that are 3 hours or more, there is something wrong with the method in which the meetings are being held or the content of what you're discussing. The Palm 2 case said the board members cannot discuss information before a board meeting, but board members can absolutely be disseminated information, different verb. Management should be giving you the information for the board, and each board member should be reviewing the information and the contracts before they get to the meeting. If the board members are reviewing everything in the management report at the meeting, there's just extra time for the board members to go through it. But if everyone comes to the meeting prepared, you've been given 3 contracts, you can discuss which one you want to choose, make a motion, then have discussion. You can discuss and contrast the 3 contracts and move on. Being prepared, the Boy Scout motto, be prepared, will allow your meeting to be more effective. And also, if you don't allow owners to interrupt and you use parliamentary procedure, every board member is allowed to speak, but use parliamentary procedure to move the process forward.
It's a great point there. And I think you've used a lot of words there about decisions, discussion, dissemination of information. One thing that came to mind is that a meeting of the board is a meeting to conduct the business of the board. Look at your agenda. If there are no items that require action, if it's a lot of discussion items or FYIs or informational updates, ask yourself if there's a need to meet. This is something that can wait. I see boards a lot, maybe those that are meeting monthly or even more frequently. A lot of them are just informational updates. And if there's not an action item on your agenda, it's perfectly okay to skip that meeting and save it until the next one. Don't just meet to meet.
I agree. And management can advise the board members of updates at a meeting, right? So keep your meeting efficient. And I think you will find that the service on the board more rewarding. When board meetings linger on and you as a board member get frustrated, then it takes away from the experience because you're frustrated in the implementation of your volunteer service.
Exactly.
So this is a slide that has a sample agenda. It's really regurgitating what we just talked about. Board meeting actions, we kind of covered this. A motion is a single board member will make a motion. There's a second, there's discussion, you call for the vote, and then you put it in the minutes. It's very specific steps. And board members and sometimes management, you can write out your motions before the meeting. There is nothing wrong. If you have 3 contracts you're going to be voting on, 3 different types of contracts, you can leave blank which contract you're going to choose because you may have 3 bids for each one, but you can write out the motions so that you're just process smooth before the meeting.
You know, when you've been to enough board meetings, and again, if you've been a board member for years, that's great. You may be brand new to this, but there will be a rhythm that becomes apparent through a board meeting. There's a cadence to what you're talking about. The making of the motion, the seconding of that motion, the discussion part. And this is if you're chairing the meeting, whether you're the president or vice president, if the president is gone and you're sitting in that chair, it's okay to wrap up that discussion. Keep the discussion focused. Don't allow it to veer into other areas, and you'll know when to call for that vote. There's a point at which the discussion is no longer fruitful. Everyone has said their piece. It's time to call for a vote. Don't be shy to do that. Unanimity is not required. It's okay to have dissenting views and to have no votes. That's okay. But just keep it moving, keep it efficient. And if you follow this process here, generally it's gonna keep you on track for sure.
Agreed. So commissions and committees, there's a slight legal difference, but let's just use them interchangeably. We're just gonna say committees for right now. Committees are used to help the board administer the community because the board members are volunteers and they've already hired a professional manager, which is why you're watching this sponsored by First Service. There still may be lots of work to do and the board members want input from the owners and or they want other people to share in the responsibility. So boards will create committees with specific tasks or specific topics. And those committees meet, and those committees make recommendations to the board. Committees could be delegated the authority to make a decision, but I don't have any boards where the board of directors delegates for the committee to make the decision. The board wants to control the decision. So in all respects, committees can, commissions cannot. Commissions must make recommendations, but for practical purposes, all boards, whether it's a committee or a commission, it's a recommendation to the board. Recommendation may be rubber stamped by the board, but the board wants to make the final decision. The topics you see on your slide are the most common committees. It does not mean that that is an exclusive committee. You could have more depending on the needs of your building. Ad hoc committees are just unique, special one-off committees, but you could have a committee for the hallway decorating project. You could have a committee for the window replacement project. You could have a committee for the development down the street that's going to be happening in the South Loop if you're a South Loop property who's just reporting on that. So you could have a whole laundry list of committees and commissions. At the end of the day, these are useful to help shoulder the burden so that if you as a board are spending too much time of your own time on board business because there are legitimately a lot of issues going on in your community at this time, use the committee structure to seek owner input and to share the burden of administration.
It's a great point. And in addition to shouldering the burden of it, it also can serve as an entree for new voices into the board structure. So some of you who are watching this may now be board members because you sat on a finance committee or you sat on a building and grounds committee. It's a way for you to see up and coming talent and interest from your community if you've got some level of a committee or commission structure. I do want to just sort of talk briefly about the practicality of a commission structure. Many of these are not self-sustaining, right? You have a broad group, you have more and more people involved, they have more ideas, they have more questions. It's very easy for a committee to believe then that they have management's full support to research all of their ideas and bring them bids as if it's a second board. Be very clear with your committees about what's being delegated and where the responsibility for that research falls. As management, there are only 24 hours in a day, 7 days a week. It's very easy to have the demand exceed our ability to supply when it comes to research and information like that. So Howard, do you recommend like a charter or some sort of responsibility document that a board would pass before instituting one?
Yeah, let's talk a little bit about mechanics. First of all, I definitely recommend a mission statement. You don't want your committee going rogue and delving into areas well beyond the scope of what the board intended. Number two, who's on the committee? Well, the board can decide. The board as a board, not the board president, but the board can vote who it wants on the committees, whether the committee is open to all the owners or only open to 2 owners or open to 5 owners. It is all a board decision. So you do what makes sense for you. And sometimes committees keep minutes just because there's a record of what's going on. You probably would not keep minutes of a social or communication committee, but in a building grounds or a finance committee, you may, because it's instructive for the board members to know what the committee's been talking about. Annual meetings. Well, this is basically what's commonly referred to as your election. And all declaration and bylaws require them at least once a year. There are 2 ways to conduct an annual meeting. Either you will be conducting an annual meeting where proxies will be sent ahead of the meeting, and you will either sign a proxy, which allows someone else to show up at the meeting and vote in your place, or you will physically go to the meeting and vote a ballot. That's bucket number 1 option. Option 2 is the Illinois Condominium Property Act was amended to allow the board to adopt rule, which is basically a board decision on 10 to 30 days notice to the owners, to allow for absentee balloting. And absentee balloting is the official ballot is sent to the owners It eliminates proxies. And you can still show up to the meeting and vote a paper ballot the day of the meeting, but most owners who have absentee balloting tend to vote their official vote before the meeting, in which case the meetings have less and less people showing up to them. You need to look at your bylaws. Most bylaws are the first by default. It's just proxy with an actual meeting in person. But more and more associations, especially since COVID, have gone to absentee balloting so that the actual ballot is sent to owners via email if you have electronic voting and communication rules, or by regular mail. But either way, owners can drop off their ballot in a ballot box versus a proxy. And a proxy is just a written piece of paper that says, I appoint person X to show up in my place the night of the meeting and vote. The proxy holder must appear at the meeting. By contrast, an absentee ballot is the official ballot. I can put that in the ballot box next to the doorman station, or I can hand it to the manager. So you avoid someone else showing up to the meeting. And owner meetings are either called by the president or 20% of the unit owners, and the minimum quorum is 20% of the unit owners. Board vacancies, if there's a board member who resigns and it's after an annual meeting, 2/3 of the remaining board members can fill the vacancy until the next annual meeting. Almost done, folks. Recent updates and challenges, COVID. Well, COVID-19 has added a dimension of complexity, but it's also created new opportunities. I will tell you, as a legal professional, where my sole practice is in community association law, the virtual board meetings over Zoom or WebEx have really been wonderful. Boards have really enjoyed it. Owners have been participating at higher rates than they were when they were in-person meeting. And because the host, which is management, can control the voice, nobody's interrupting meetings as they go. Meetings are less contentious because the board is just talking on video and owners are listening. It's really been ineffective. I forecast well after we return to normal, whenever that may be, you will still see virtual meetings occurring. You will see in-person on occasion for camaraderie, because there is a sense of community when you're physically together. But I do think you will see virtual board meetings being held whenever meetings need to be held for a specific purpose or to quickly get things done midday. You're going to see a different change of that. Related to COVID, you have masks. Here in the city of Chicago, there is an executive order that masks are mandated in common elements of condo associations. So your board can enforce it. We are recommending, if a board intends to vigorously enforce it, you can also adopt your own rules and regulations relating to masks, relating to social distancing, relating to elevator use. So you can mandate through your rules policies which are going to probably be very relevant for the next couple of years as we unfold how COVID-19 unfolds in the years to come. Amenity spaces, there has been a sine curve of everything shut down, some started to open, everyone got scared again over the holidays as the virus spread and lockdowns were imminent. In some states they occurred. So there's this balance of you need to do what the board thinks is safe for the owners. That may not be what every owner hopes for. There may be owners who are confined to their condominiums in the city of Chicago, for instance, small space, and they're gyms they don't want to go to because of COVID, and they want to go to the fitness room on the third floor of their high rise. Well, you need to be thoughtful about what protocols you are implementing. Are there any insurance coverage issues with your insurance carrier? How are you mitigating the potential spread? What policies are you implementing to limit the number of people in the room? Are you closing off equipment? So if you are in the mindset of slowly reopening amenities, do so in coordinated fashion with management, maybe double checking with your legal provider just to make sure you covered your bases, and do so in a thoughtful way. There may be extra costs associated with sanitation protocols, but you can do it. Brian, this is probably an area where it's less legal. And what have you seen that's effective, or boards that have not yet opened that you can share the benefits that boards who have opened successfully have done?
Sure. I think the last year has been dominated by the response to the coronavirus, lockdowns, as you mentioned, ups and downs. It's been an emotional journey, but every board in the city that has an amenity is having this conversation. They may not all be coming to the same conclusions unless there is a hard and fast rule. And sometimes that has come out of the city of Chicago, or maybe even at a federal level. Absent a hard and fast rule, there is a level of judgment that a board will need to exercise over whether or not to reopen. But there are some best practices that we've seen for those that have successfully done it. One is know your community, right? You need to understand what the demand is, where you can continue to potentially mitigate some risks. Is it necessary to open a party room right now when parties are not allowed? Probably not. Would it make sense to maybe refocus those resources to your gym instead, where you can, sign up maybe one at a time and have heightened cleaning procedures and protocols? That may make more sense for you. So this is one of those areas, I think, where you have a lot of people that have different opinions on what the risk truly is. As a board, you need to protect your community to the highest extent possible. So it's about reserving the space, cleaning the space, communicating about what the expectations are, mask wearing being still required. Some folks will open their gym to their residents, but they won't allow trainers in because they don't want non-residents using those spaces. So there are a variety of ways to tackle this. But I think be cognizant of the true cost of this. Be cognizant on the staff time. Be cognizant of what it takes to really sanitize a place effectively. If you're looking at improving your technology so that there's more air circulation in a gym, there's some disinfectant opportunities, take a look at that before you go and just open it as if COVID wasn't there. You may find yourself having a little bit more protection in the long run.
Great points. The last point on the challenges, you should be aware that in 2020, Governor Pritzker signed an executive order that was continued throughout most of the year. That was a complete moratorium on evictions in December of 2020. That was loosened to allow community associations to send a letter asking if a unit owner who's delinquent, if the cause of that is COVID-19, if they send back a signed declaration, you cannot proceed with the collection. If they do not, you can proceed with the collection. There's also a federal mandate on moratorium of evictions for COVID-related hardships. So you just need to speak with your legal provider to make sure you're still aggressively pursuing the remedies that you're allowed, but complying with the nuance that keeps changing here in 2021.
I think just as a management partner here that is often looking at those accounts receivable and in analyzing those for owners that may be delinquent or behind, this has been a rocky year for knowing how to proceed on this. And as Howard mentioned, the guidance on it can shift depending on the executive order. There may be, again, some federal moratoriums that are in there that may have some interplay with what we're doing here in the state of Illinois. But it's best to get updated guidance if you are seeing heightened delinquency. As a management company of many associations throughout the Chicagoland area, we've been monitoring collection efforts and what is the health of our overall association portfolio. Because we were concerned, I think, along with many, that an economic recession, lockdowns would lead to financial hardships which negatively affected community associations. And we're still keeping an eye out for that. But I think we've been, I would say, cautiously optimistic by the initial months of this. We are seeing folks continue to pay. We are still seeing healthy levels of association operating funds. We are seeing that collection still happen. It's not to say that there aren't outliers, but as a whole, as a sort of residential community here in Chicago, we're still on okay footing. But we don't want to lose sight of the collection. You should still continue to act as Howard just suggested.
Good. So Brian and I put together a list of 10 board mistakes. To be candid, it's just the inverse of many of the topics we've talked about, boards not doing. So we'll leave this up for a few seconds so that owners can read or the board members can read. But at the end of the day, it's not implementing all of the things that we have told you in the last hour boards are required to do, or boards should be doing. So the mistake is not doing those things, whether it's not holding the requisite number of meetings per year, or you don't seek the counsel of experts and you make decisions in a vacuum, or you allow board meetings to go sideways. That's a mistake, not because it's a legal mistake, but it's less efficient. And we're here to provide you the resources so that you can just move forward, make your decision, next task. Best practices. This is just kind of a summary of everything we've been talking about and the positive side, right? You have the obligation to act in the best interest of the association, make good discussions, rely on the advice of expert. You can see it's the converse of the mistakes. But the bottom line is ask for assistance. Use your manager, use your management team to your advantage. You're paying them for their expertise, not just to implement the tasks of everyday maintenance. They are partners with your board. As we, at least in our firm, we are partners with our boards to provide information so that you can make the best decisions for your community. And we would have questions, but on this webinar, you'll have to reserve those questions. And if you still have them, my webpage is up and you can contact me or you can contact your management professional team.
I like what you just said there, Howard. If there are questions after this presentation, please do reach out to your property manager or to the regional director that oversees your account. Our goal at the end of the day, as I mentioned at the top of this, is to educate you, make sure that you feel comfortable in your service as a board member, and to essentially serve as that resource and partner that you need to effectively manage your association. Howard, I want to thank you. That was great. Appreciate your expertise, and I know that our board members will be as well. And if you attended, we look forward to seeing you soon at another one of our upcoming educational webinars. Thanks so much.
Thank you, Brian. I think we both made this relatively dry content a little bit more and it's my pleasure to share my expertise with your clients. And you can always contact me with questions, whether I am the attorney for the association or not. It's my opportunity to provide education. This is what I love to do, and I'd be happy to assist with questions.
Thank you so much.